Good day, students. It's nice for me to be here today. We are going to look at. My name is Mr. Muibi, and we are going to the subject I'm going to teach you this today is financial accounting. Then we are going to look at the topic. We are going to look at is depreciation of a fixed asset of depreciation accounting. But before I proceed, I would like to share this knowledge with you. I would like to make reference to our previous knowledge. Our previous knowledge we discuss about bad debt recovery, and the debt is we are talking about bad debt. That's irrecoverable debt that cannot recover. But it happened that some uh, companies, some business can recover their even some private individual can also recover their debt from their debtors. So we look at that account, and we look at that topic. Then we also prepare some accounting under it. So that is what we discussed in our week 6 in our previous lesson. But for this week 7, that is a depreciation. So let us look at the lesson objective. At the end of the lesson, students should be able to define depreciation account, state the features of depreciation, describe the causes of depreciation, and explain the reasons for depreciation. So all this we are going to discuss about them. Then let us look at the meaning of depreciation. Is fall or decrease in the economic service potential of an asset. An asset, we are talking about asset. The asset is a wear and tear, or you can say usage. By the time they are using it from time to time, the value of that asset will continue to reduce, or it will continue to decrease or fall. So obsolescence and inadequacy. So all these are the factors that can make this depreciation to or these assets to reduce in value. So depreciation accounting is a systematic procedure of allocating the costs. There is need, if you're an accountant, there's need for you to allocate the cost on different on what? Allocating the cost of a fixed asset over its estimated useful life. And it must be charged to the final account as expenses. So depreciation we are going because is that asset that you are looking at, it will turn to an expenses to you because the fixed asset, the furniture, the building, the furniture we are talking about, it will become an asset because if motor vehicles that you is an asset, but motor vehicle can turn to motor vehicle expenses, and whereby it will turn to an expenses, and what we are going to transfer your charge it to the final account as an expenses. Final account, that is profit and loss, trading profit and loss account and balance sheet. So that is let us look at the depreciable assets. We have some assets that can depreciate. These are items of property. Items of property, free of property can depreciate. Plant and machinery can depreciate. So they can depreciate. The only asset that cannot depreciate is land. That's only asset that we cannot depreciate. Then we have depreciable assets have lives of over 1 year. So that's just over 1 year, over more than 1 year, then the asset will continue to depreciate. There's nothing you can do. The asset, maybe you call it land and building, call it property, freehold property, you call it motor vehicle, call it motor van, you call it freehold expenses, or freehold property, freehold office equipment. All these uh, can depreciate as time goes on. Uh, they are required primarily for use. So they use them in provision of goods and services for an enterprises. So there's no, even in this school, you can see that we have different assets here. We have, first thing we have is building. The second one is furniture, chairs and tables. All these are the assets of the of the school here. So even the company as well, they have their own assets. So so these are the assets, and they have limited useful economic life. So they are just have short period of time for them to use them. So as time goes on, that asset will continue to depreciate. Will continue to decrease in value or fall in value. Then they are not intended for sale in the ordinary course of business. So that those assets are not meant for they are not meant for selling. So it's not the purpose for having them is not for them to sell, but for them to serve the company or to make sure that they use it for the property that will bring liquid cash to the business. So then we also have examples of these assets. I've said it the other time: plant and machinery, motor van, furniture and fixing, land and building, premises. I've told you notes by. Uh, so land is not depreciable. So land it cannot depreciate. You cannot charge depreciation on land. You can only charge depreciation on building. On building. So let us look at the features of depreciation. One, it is a reduction in the value of fixed asset. The fixed asset will continue to reduce. If the to fall, it continues to decrease in value. There's nothing you can do about that. When we are talking about fixed asset, so they continue to reduce, to decrease, or to reduce to fall in the value of the asset. It is not a not cash expense. So it is not meant for those assets, fixed assets. It's not meant for the cash immediately. It's not meant for that. It's an expenses, but it does not involve actual cash flow. So it's not, but it's a permanent asset that they use continuously for the business organization. So, and it is continuous until the end of the asset useful life, until when the company cannot be able to use them. So that is the time that it continues usage until the asset become of no use again. So then the fourth one is it is a reduction in the economic life of an asset. So the economic life of an asset can also be reduced. So let us look at the causes. What are the things that can cause asset to be depreciated? One, factors, physical factors. Asset may depreciate in value as a result of physical factors like flood and heat. Yes, during the rainy season, there's nothing. There's no how you put iron outside, which will serve as machinery or machine, or let me say machinery outside, and when rain is falling on it, so it will. That one thing that to rust, it will rust, and there are some assets that will also decay. So these are the physical factors. Then wear and tear. When assets are in constant use, there's no how. When you are using the asset often and often, so the asset will continue to depreciate, will continue to fall. The value of that asset will continue to fall. So that is a wear and tear. The asset may one day become due for replacement. So it will get to the extent that there will be need for the owner of that asset to replace with another one, to replace that asset with another one. So that is a passage of time. Assets like patents, copyright depreciate as a result of passage of time. Then depreciation is there for rating of their life, and it is referred to as amortization. So that is passage of time. There's no how the asset will, the time of the asset will continue to pass from from time to time. So there's no how we can't do anything about it. Then obsolescence. Asset may be out of use because of increase in the output of a firm. So obsolete assets that we are using before may not be relevant again to the company or to the business firm. So these assets need to be replaced with new one and bigger one. So if an asset or machinery is become of no use again, why can't we replace them with new one, or the one that is bigger that will serve the company for a long period of time? So that is the obsolescence. Then let us look at the reasons for depreciation as well. The depreciation, it reduces net profit. There's nothing we can do when it will reduce the net profit. So the net profit will be reduced because there's still need for the accountant to charge depreciation on as part of the expenses, and tax will also be reduced as well. Then the value of the asset will not be overstated, so it will not overstate the value of the asset will not be overstated in the balance sheet, because when you get to the balance sheet, the cost of that machinery, if it's 50,000 and there's depreciation of 10% of 50,000 naira, so that means simply you're going to charge 5,000 naira from 50,000. So that means the asset has not been overstated. So what you're going to write as the net book value will be 45,000 naira, not 50,000 naira again, because that asset has already been depreciated. So it must not be overstated. That's what I'm trying to say. So you will not record the actual, amount for that machinery. So then the firm may have a fund to replace the asset. So if it's possible for the firm to have money to replace it with another one. So then it also ensures that the cost of an asset is spread in an equitable fashion over its estimated life. So the cost of asset will spread when we get to the normal accounting procedure. It is spread to the over estimated useful life. Then it helps to ascertain the true profit. So to make us to know the true profit, because it is deducted from the gross profit. Depreciation will be deducted from the gross profit, and to make us to know the true profit of the business organization. Then element of depreciation, we have original cost of asset. This refers to the cost incurred in purchasing an asset. The actual amount for purchasing that asset is original cost of asset. And this includes the actual cost, I've said that, cost of carriage, cost of installation, and other capitalized expenditure on the asset. Then we also have salvage value, and this is the estimated value of recoverable when the asset is disposed of. So when the asset is disposed of, the balance will be, we call it salvage value, or you can call it estimated value, or you can call it scrap value. You can also call it scrap value as well, scrap value. So then estimated useful life. This is the number of years of expected use. So there are some assets, when they buy some assets, they can tell them that that asset they can use it for 5 good years. So then an accountant will calculate depreciation on that asset. That asset will last for the good 5 years or more than that. So it depends on how they can value the asset. Then we have other terminologies. We also have the terminologies here. Depletion, that is the process of allocating the cost of the resources to the unit of an asset. So example of this asset are timber, mining, so this method we are not going to use this method for the student. So it is not welcome in the scheme of work. So we also have appreciation as well. Appreciation is a permanent increase in the, when we have when the asset continue to increase in value, asset continue to increase in value, that is a appreciation. It's different from depreciation. Depreciation is when it's being reducing, that is the reduction of asset. Appreciation, that is the increase in the value of an asset. Then accounting procedure usually ignores bringing the appreciation into account. So mostly accountant doesn't apply this formula because they like to apply the depreciation method. Appreciation is increase in the value of asset, while the depreciation is decrease in the value of an asset. So let us look at the other one, amortization. Asset with fixed period of legal life, as we have patent right, we have copyright, patent, leases of property, also depreciate. All this also depreciate as part of the assets. So depreciation for cash such asset is regarded as amortization. We are in the copyright is sometimes in accounting we call it an asset. So and it also depreciates. So it can be defined as a provision made for the consumption of intangible asset. So we can recognize this one as intangible asset. So then let us look at how this cost of patent, 50,000 naira. The cost of patent is 50,000 naira. This was written off for 5 good years. Then how we go to calculate this? We are going to, it's very simple. the value of amortization is 50,000 naira. Divide it by 5. So when you divide 5,000 naira by 5, you get 10,000 naira for each year. So that means for the first year to the 5th year. So that will be 10,000 naira. That's amortization. So that means it's going to pay. It will be paying 10,000 naira for the next 5 years. So that is the depreciation account. So that's the depreciation account. So that depreciation account is just the decrease in the value of an asset, or continuous fall in the value of an asset. And my student, once again, go to your textbook, Amplified and Simplified Bookkeeping, Bookkeeping of Accounting by Femi Longe. So I wish you the best of luck. Stay away from any dangerous disease that can affect you and any of your family. Please, till then, bye bye. Bye for now.